for good. Welcome to our special Market Masters today. The list of ministers is out, and if you were a Rip Van Winkle who slept through the election and the results, you will think it is actually the same government in power, just cut-paste. So, how should stock traders and investors read the continuity in the Council of Ministers? What sectors should one bet on, expecting policy, of course? And what does the signing of the Kisan, Samman, Nidhi and PM Awas Yojana as the first two programs of the government signify? Again, what about ministries given and not given to the allies? For these and all questions, I'm joined by Nilesh Shah, the promoter of Envision Capital. Nilesh, thank you very much for spending time for us. Well, first up, cut-paste Council of Ministers list, at least as far as the key offices are concerned. Do you think this will trigger, I mean, already the market has bought the dips. Do you expect things to pick up from here on?
Latha, yes, I probably think so. I mean, if we look at essentially the list of ministers, one thing is for sure that there is going to be continuity. That's essentially the underlying trend, underlying theme, that we are going to see essentially continuity of what we have seen for the previous 5 years or maybe over the last 10 years. And what this implies is a continued focus on economic growth with essentially a tinge of fiscal consolidation. So you're going to see a continued period of macroeconomic stability. And this is what markets want. This is what investors will be looking forward to. So to that extent, I clearly believe that the next 5 years from an economy point of view and from an overall business environment point of view, it will essentially be the continuation of the policies and the focus on growth that we have seen over the last many years.
Okay. Railways, actually, Ashwini has got a lot of portfolios. You know, he's got Railways, MEITI and INB. What do you read from this? Do you think the railway stocks are worth betting on? Do you think it will not be all that populist as was expected? You know, the big expectation was railways will go to maybe JDU, maybe Nitish Kumar's party. What do you make of this particular sector?
Well, it continued to kind of show interest in the railway space. Clearly, that's been a top priority of the government over the last 3 to 4 years, especially in the post-COVID era. We've clearly seen a huge focus on railways, and that's really, many years back, it was clearly the roads, which was essentially the very big focus of the previous governments or the previous tenure of this government. But clearly over the last 3 to 4 years, it's railways which has essentially become the center of focus. And clearly lots has happened, many new initiatives, huge progress, huge development there. There's a huge thrust on introducing new trains, faster trains. There's a massive overhaul. The stations are getting modernized. So I clearly believe it's been so far a period of expansion, innovation and modernization as far as Indian Railways is concerned. And I think it's very heartening to know that we still continue to have Mr. Vashni as the Minister for Railways. And that, I think, augurs really well for the rail sector as a whole. Coming down to individual investment opportunities, of course, as investors, we will obviously have to be focused on the kind of multiples that we pay for these stocks. But I still believe overall, the tailwinds for the sector continue unabated.
Okay. The only other specific sector, roads, again, there was an expectation that the allies will stake their claim. But the expert has returned back in roads, Nitin Gadkari. Does that mean anything in terms of road construction, capex, cement stocks? I don't know. How would you approach as a stock investor?
We've probably got the best man for the position, the most experienced. I would probably call him the veteran of the space. So to that extent, again, that continues to be an excellent choice. And the fact that the Prime Minister has chosen to kind of maintain continuity bodes well for roads as a sector. And therefore, it means continued expansion of the road network. It means more demand for construction services, more demand for construction equipment, more demand for construction materials. So I clearly believe that the overall sector is very favorably poised for a period of extended and a continued growth for a few more years. So to that extent, again, a great decision, and I think that means we'll continue to see better prospects for the sector. And on the whole, Latha, if we were to kind of combine both railways and roads, clearly, I think what it signals is a continued priority for infrastructure growth, infrastructure building, and ensuring that India has world-class infrastructure to support our manufacturing and our other businesses, and to make India way more competitive as a manufacturing, business, and investment destination.
Yes, that's true. When have we last had 3.3% of GDP as investment in capex? Revex has always been a giant absorber of government revenues. Do you think that gets affected? I'm asking you only because the first two files signed were Kisan, Samman, Nidhi and PM Awas Yojana. To be fair, both are existing programs, and money had to be dispersed. For 2 months, nobody had signed anything. Maybe it was just that, but isn't it symbolic? And therefore, do you expect more welfare and perhaps something taken out of capex?
I expect the welfare programs to continue because
not increase.
No, there can be an increase, and that would essentially be a function of economic growth and tax collections. I think both of these essentially will define the denominator, and essentially the denominator becomes the base. And if the denominator and the base keeps expanding, you would see increased outlays also going into welfare. But I still believe that as a percentage, it will continue to be way more measured the way it has been in the past. That despite very, very difficult situations, I think that piece got managed really well in terms of the allocations, and especially as a percentage of GDP, which ultimately has resulted into a declining fiscal deficit. So to that extent, we must give it, and we must concede it to this government, that they have been way more balanced in terms of the fiscal responsibilities. And I believe that mantra or that priority will continue for the rest of the tenure.
Okay. So no danger to capex or deficit.
No, I don't think so. I still think that both will continue to be the two pillars of the government spending. And I think the government is extremely cognizant of that, and it has already shown it in terms of its past actions. So to that extent, I would again think that even on these fronts, be it allocation to infrastructure or be it allocation to welfare programs, I would still think that the government will continue to demonstrate equanimity rather than just going overboard in either directions.
Okay, let me not ask you individual ministries. I've probably asked them all. What's your overall take after looking at the ministries and looking at stock valuations? What would your priority list be in terms of attractive sectors?
So, Latha, again, I think if one looks at the composition, the list and the composition of the cabinet, I think, again, it just showed continuity, so as to say. And
so, yeah. I mean, what I meant was specific defense, private sector, public sector companies, railways. In all this, as you correctly pointed out, the valuations have become crazy. So where do you still see value?
So the great part, Latha, is that these are opportunities which are very huge in terms of the number of companies, be it defense, be it energy, clean energy, be it manufacturing, be it indigenization, be it infrastructure built up. I think all of these essentially are still very, very long-term opportunities. Still, we have a long way to go. So to that extent, the businesses will keep growing. And I think in each of these spaces, there are a whole range of maybe, several dozen companies out there. And within that, I think we have to kind of keep selecting individual companies, not that we necessarily put all our capital into necessarily just these opportunities. But yes, we will need to participate and look out for those individual companies where valuations still are reasonable in context of the growth ahead. So we have seen that as long as companies continue to grow, valuations are a less of a challenge. I think valuations become a challenge only and only when growth begins to plateau and taper off. I don't see any signs of growth tapering or plateauing as yet. Still, I think these companies will continue to grow for maybe at least next 1 to 2 years. And still, there are pockets of where valuations are way more reasonable in context of the growth that lies ahead for the next 1 to 2 years. Of course, we have to keep in mind that these are not sectors of businesses on which sitting today we can take a 5 or a 10-year view. These are companies which essentially, of course, depend a lot on the government spending, and they will essentially, therefore, the growth is going to be maybe there for the next 1 to 2 years. I mean, the period of hyper growth, which I may call, will be there for a couple of years. But it's hard to take a call today whether this growth will continue for the next 5 or 10 years, because at some point of time, when you've already made investments in these sectors, beyond that, then growth will normalize for these sectors. So one will have to be, cognizant of that.
Okay, fair point. The curve will plateau at some point. Considering that the allies have not asked or perhaps got any plum portfolios other than civil aviation for TDP, do you think that some Andhra package or Bihar package is in the works? And again, as an investor, how will you look at it? Is it, Amravati building and therefore cement stocks, Andhra companies? I don't know. As an investor, tell us.
So, Latha, both these states, of course, have been having their own set of demands, which have been there for now a very, very long period of time. And I probably think that the leaders of these political parties and of these states have probably already voiced or reiterated, that obviously their respective states will need a fair share of the development as well as the allocation. So to that extent, and these are two very large states. These are not, small states, tiny states that they won't move the needle. Both Andhra and Bihar are big states, massive states. And to that extent, whatever increased allocations that both Andhra and Bihar receive will actually have an impact on India's aggregate GDP. So to that extent, if there is allocation, and keep in mind that both these leaders also have a strong track record of development and capital allocation. And to some extent, they do have a track record of being reformist. So to that extent, it's actually great that both these two states will probably get higher priority than what they have got in the past. And that would mean increased allocation, increased spending. And so to that extent, especially from an Andhra Pradesh point of view, you're going to see increased investments and step up in infrastructure. The fact that a new capital is likely to be built will going to entail, investment of thousands of crores, and that bodes extremely well for construction companies, especially the local regional companies. So construction companies, construction material companies, construction equipment companies will again get an added layer of growth for themselves for a long period of time. Coming over to Bihar, apart from infrastructure, I think Bihar, of course, has been witnessing some strong consumption as well. And therefore, a lot of local regional businesses, which are more consumer-oriented, retail-oriented, will also benefit, apart from, of course, the infrastructure companies. So I clearly believe that these two states will contribute meaningfully to overall India's economic and GDP growth over the next 5 years or so.
Okay, our viewers will want some very pointed advice from you, Nilesh. So a very quick last one, your hierarchy of sectors and returns from the market this year and next.
So, Latha, I think, from a very long-term point of view, consumer and financial still should be the mainstay and receive a fair share of the allocation. These are long-term compounding opportunities. Other than that, I think businesses which are a play on clean energy, businesses which are a play on the mobility transition and the renewables, electric vehicles, I think all of that entire pack with a dose of manufacturing-oriented businesses, energy-driven businesses. I think these are some of the sectors which I think should do well from a medium-term perspective, which means from at least the next 1 to 2 years perspective. As I said earlier, hard to take, those 5-year, 10-year calls on these sectors. So I think it will have to be consumer and financials as more long-term plays. And then, of course, the whole defense, railways, infrastructure, energy as more the medium-term plays. Latha, in terms of what what investors can expect, I believe the economy will continue to demonstrate a 7% GDP growth, maybe a 10 to 11% of nominal growth, which means corporate earnings will grow at about 12 to 15%. My view is that I think 12 to 15% in line with the nominal GDP growth and earnings growth is what investors can expect from the Indian equity markets over a 1 to 2 year perspective. Of course, in the process, if interest rates falls, markets get higher valuations, the FIs come in even a bigger way, then that can be the icing on the cake or the cherry on the cake.
Fair point, fair point. That's very helpful numbers. Thank you very much, Nilesh, for packing in so much in such a short time. Pleasure having you with us, as always.
Thank you so much.
Okay, so the markets, after that initial dip, have greeted the Council of Ministers with a lot of green on the screen, in particular the mid-caps up 7%, up 0.7%. Wrap up on Bazaar on that note. Chart Masters up.